Good morning and welcome to another episode of the Market Snapshot series. My name is Rupas Kamau, Markets Analyst at FX Pesa. So today we'll be looking at the key highlight events that are expected to be moving the markets today. And once we cover that, then we'll also be going through the technical analysis charts, trying to understand the major trends in currencies, commodities, indices. And once you cover all that, hopefully you'll be able to trade or approach your day from an informed perspective. So hello everyone, welcome to the session, and make sure to say hi on the live comment section once you join in. And this will confirm that everything is working just fine. So as usual, I'll begin with a disclaimer. Basically, we all know that these sessions are purely educational. So this does not represent investment advice. It's not a recommendation to trade. So always do your own due diligence and of course, practice proper risk management. So let's begin with the key highlight of the day. And that is the UK government basically getting officially into a recession. So we saw this happening earlier in the day at 10 a.m. So if you look at the economic calendar, and I'm hoping everyone can see this, try and make it bigger. Yeah, perfect. So today being Thursday, the 28th of March, so we had an early speech by FOMC member Ola. We heard the Bank of Japan summary of opinions, MI inflation expectations in Australia, and ANZ business confidence survey. So the major news was at 3:30 a.m., the retail sales coming in from Australia, which came in at positive 0.3%, a big slowdown from the previous reading of 1.1% increase, and of course, missing expectations of 0.4%. Private sector credit improved to 0.5%, which is the same as the prior month, and this was better than the expectation of 0.4%. German retail sales continued to slow down, in this case down 1.9% in the previous month, and this is an acceleration further down from the previous reading of negative 0.4% and a big miss of the expected 0.4%. UK current account came in at 21.2 billion in the negative. It's slightly close to the expected 21.3 and a further worsening from the previous reading of 18.5 billion. So the final GDP came in at negative 0.3% as expected and same as the previous reading. And West business investment quarter over quarter was down 1.4% from a previous increase of 1.5%. So the key highlight for the day is the GDP data. And as you can see, the GDP of the UK hasn't been performing all that well. So in the previous quarter, there was a contraction of 0.1%. And now in this case, another contraction of 0.3%. So whenever we see an economy contract for 2 consecutive quarters, then it's official, we have a recession. So in this case, it's not such a worse recession. It's not like a negative 1%, it's a 0.3 followed by following a 0.1 contraction. But yet it's expected to be one of the major news for the day. So going forward, we'll be expecting a couple of things. One is the GDP from Canada at 3:30 p.m. So in the previous reading, it was 0.0%, and now we expect an increase of 0.4% in the previous month. Then final GDP quarter over quarter for the US, we're expecting 3.2%. So the US economy has been pretty strong, and this could be a key indicator for the market. So if the GDP continues expanding and growing at a much higher pace, then this would imply that the fight against inflation might be tougher for the Fed, and that would imply rates staying higher for longer and the dollar remaining strong. So if GDP is weakening, then it would mean that the Fed is finally being effective. And as a result, we could be seeing the dollar starting to weaken. So towards the end of the day, we'll be looking at the revised University of Michigan Consumer Sentiment Survey. In the previous reading, it was a high of 76.5, and we expect a similar number. So looking at the survey, you'll notice that over the last couple of months, what we have been seeing is a strong increase from the lowest reading we saw in June 2022. And consistently, this survey has been increasing, although there are some months where there's some reductions. So we could be seeing the consumer confidence increasing, and this is a key indicator of future consumer spending. So if consumers are confident, then they spend more, and this tends to boost the economy, and growth happens much faster. But then if consumer confidence is reducing, then it tends to be a negative sign of the economy. So we'll be following these two towards the end of the day. So that's it for the day. And then for tomorrow, of course, we'll be focusing on the core PCE price index. A majority of the markets will be crossed. Notice that today from the evening, this is when you'll be seeing the New Zealand and Australian economies close for the Good Friday celebrations. Then for the Swiss franc, we'll be seeing market close tomorrow, the Eurozone, the UK, Canada, as well as the US. So for the US, they did not spare the core PCE price index, so there'll still be momentum expected on only one economy, that is the US. So we'll be focusing on the USD, gold, as well as US equity indices, and that should be at 3:30 p.m. So towards the end of the day on Friday, then a speech by Fed Chair Jerome Powell. So knowing that that's the expectation for the economic calendar, there is other news in the markets that we ought to focus on. So one of them is big news that was shared this morning. And from what we can see here, Xi Jinping, the president of China, basically talked to the China's central bank. And he basically said restart treasury bond trade after a 2-decade hiatus. So President Xi has told China's financial cadres that active monetary policy toolkit must include controversial means of injecting liquidity into the economy. Economist says the People's Bank of China has not bought treasury bonds for years because monetary authorities did not want to fuel market speculation of a major stimulus. So it appears to be just a matter of time before China's central bank pulls out a controversial monetary policy tool that it has not used in more than 2 decades, following newly publicized instructions from President Xi Jinping. So with our second largest economy at critical juncture of fueling growth in its bid to become a global financial superpower, a new book details some of Xi's thoughts on finance dating back to late 2012. Of particular note are comments that Xi made on to financial cadres during China's twice-a-decade Central Financial Work Conference on October 30. It is necessary to enrich the monetary policy toolbox. The snippet reads in excerpts of Xi Jinping's speeches on finance work. The People's Bank of China must gradually increase the trading of treasury bonds in its open market operations. So in this case, what China is trying to do is basically buy bonds out of the open market. And if the People's Bank of China is buying bonds, it's basically injecting currency into the system. And this currency tends to end up into risky assets. So when there's too much money in the system, people will buy real estate, people will basically buy stocks, they will buy cryptocurrencies and every other asset available. So in that case, you expect to see a big boom. The last time we had a big, massive QE happening in the US was just after COVID in April 2020. And as a result of that, we saw a big rally in US equities. And we could be experiencing something similar depending on the scale of the quantitative easing planned by the Chinese president. So in that case, there's an expectation that at some point we'll be seeing a strong rally in Chinese equities. So besides that, I don't know if there's any other major news. So the key highlights for this morning are: one, German retail sales unexpectedly fall, China stocks rise on stimulus hopes, European markets set for a mixed open, Thailand industrial output falls less than expected, Japanese yen holds ground on intervention risk, Brent rises after EIA report, and Australia retail sales rise less than expected. So yes, if you've been wondering what has been happening with the Japanese yen, there was a meeting yesterday where the Bank of Japan, together with the Ministry of Finance of Japan, were concerned about market speculation and that the yen was weakening too much against the dollar, and they literally threatened to intervene in the market. And as a result, we saw the yen start beginning to strengthen against the dollar, but speculators are still betting against the Bank of Japan. So until we see a substantial intervention, meaning that the Bank of Japan would be injecting dollars in the market to support its currency, then in that case, we could be seeing the yen strengthening. So this has not happened yet. It's still a possibility. So you have to be aware of that as you approach your trading. Hello, Molenga. Hello, Mwangi, Edwin, Trapskade, Lamik Bwire. Thank you guys for joining. Hello, Tony Dark. Hello, Savage. Hello, Manthi. Thank you guys for joining. So let's get on to the favorite part, and this is a technical analysis. And then once we cover this, hopefully we'll have built something that's informative and helpful for the day. So I'll be starting with the usuals. So we start with the dollar index, and clearly you can see that the story of the week started with the dollar index moving downwards and then starting to recover on Tuesday. Then on Wednesday, an attempt to move higher, and then today being Thursday, you can see the dollar index ripping higher. So this is quite clear and clean, and normally whenever we see the dollar index ripping higher, then it basically means that there is major trends being formed in other pairs. So for instance, for the USD JPY, there was a big drop happening yesterday, but now you can see the market is going or eyeing a recovery, and we could be seeing the market retesting the high yet again. So this remains a possibility that the USD JPY goes back up and retests that previous high. So as for Euro USD, you can already see, remember the Euro has the most weight in the dollar index. So when you are looking at a basket of currencies trading against the dollar, the Euro tends to have the most weight. So early in the week on Monday, we projected that the market would rise here, get to the previous support, now turned into a resistance, and then move back downwards. However, that did not play out. So the Euro kept strengthening against the dollar up until it got to this other level around 1.086. So upon finding resistance there, market ripped back downwards. And yesterday kept going down, and today we have broken the low of last week, meaning that there is a strong likelihood that the market continues trending in that direction. So in this case, we are witnessing a very strong channel that lasted about 6 weeks being broken, the market retesting the breakout point, and then pushing further down, pulling back up, and now further down, which means that the overall expectation, especially in the near term, is that we see the market now retracing, and after the breakout here, moving all the way back down to the previous low. So that is the overall expectation for Euro USD. So I expect, though there will be some noise in between, that the Euro USD will eventually drop to the previous low in February at around 1.0697. So there's still more room for downside. So as the dollar strengthens, then the euro keeps losing ground to the dollar. So for the pound, we saw the market moving up. We projected on Monday that the market would eventually bounce at this area, an area that served as a previous low support and now turned into a resistance. It played out as expected. Market hit here on Tuesday, pull back downwards, and now we are progressing with the downwards momentum. And now the new target becomes the previous low. So the previous low was 1.25733. So in this case, the overall expectation is that the market drops to this area towards the end of the week. So as for USD CAD, we expected the market to drop all the way down. So it dropped quite nicely, kept going down on Tuesday, but then towards the end of the day on Tuesday, starts moving up, retests this area, pulls back downward, and now we are moving back higher. So in this case, the strength of the Canadian dollar was short-lived, and now what we are witnessing is yet another retest of this resistance, but notice the difference in the swings. So the key idea here, and I want you to focus on this, is that the first time the market got to this resistance, it made this downswing. So after making this downswing, notice that it went back to the same area, made this downswing. And then the third time that the market got here, made this downswing. And you can see the downswings are getting smaller and smaller and smaller. So this basically tells you something. Basically tells you that the buyers are not waiting for the market to get to the lower trend line. Anytime they get a pullback, they keep on buying, and the resistance here is becoming weaker and weaker. So there is a good chance that the USD CAD will be breaking this resistance and pushing higher. So from the 4-hour chart, this is how it looks like. So it's several times that the market was unable to break, another several times here, and eventually we expect to see a strong dollar ripping above for the USD CAD pair. So potentially we could be seeing a breakout, and a breakout would mean that now the price rally is higher. And now if you use the past prices to try and identify a potential target area, then it seems more likely that this area here might be significant today. So in this case, we are looking at 1.365. So 1.365 could be our next target once the market breaks above this area. So quite a significant move. If you go to the 1-hour chart, then you can see there is a nice opportunity that could play out for the day. So as for gold, we are currently seeing quite a big change here. So notice how the market was moving downwards through a channel. So I'll try and move back here. So this was the big spike that formed a new all-time high. Gold moved downwards, traded in this channel for a while before it broke towards the upper side. Now started trading within this triangular pattern. Eventually made a breakout, retested the area here. And then after retesting this area, notice how it continued holding this support. And now we have retested the high that we saw on Tuesday. So it basically represents a very strong momentum in gold. And this momentum indicates that there is a likelihood that gold is vying to form a new all-time high. So even though we have what looks like a reversal pattern here, there is a good likelihood that gold eventually goes for a new all-time high. And if we zoom this chart out, just a moment here, this is what we are looking at. A market was generally moving this way, meaning that the lows were getting lower. So from the upper side, it was like this. Then we had a breakout here, market going for a new all-time high. Then looking at the current price action, we notice that there is some emerging trend here. And now after the formation of this emerging trend, we can almost see this as a triangle. So in this case, market swinging down and then up, down, and then up, finding resistance here, and then eventually breaking above this area here, pulling back downwards to retest, and now potentially bouncing from here. So remember, the all-time high is around $2,222 per ounce of gold. And now the expectation is that gold now bounces from this area and potentially rallies to 2,222. So there's still more room for upside in gold, especially considering the geopolitical risks happening, central bank demand, And this could imply getting some quick pips from this area as the market projects to move even higher. So for US equity indices, what we are seeing is more pressure downwards. So I would say that this is a sign that US equity indices are now weakening. So what we are seeing here is a sequence of highs that are getting lower and lower. So for the Nasdaq 100 index, this is the prevailing pattern. But then on the lower side, it's not that strong. I wouldn't say that this is a pretty strong trend. So the overall expectation of seeing a new all-time high is being weakened by the technical analysis we are seeing here, where every single day we are seeing the market consistently moving towards lower lows and lower highs. And as a result, it basically creates an expectation that the market is now headed lower. So if we try and combine these to find a most fitting trend line, then it might make sense to connect this way and identify this as some form of flag that the market has been unable to break out of. So in this case, if this is what we have, then the overall expectation is that the Nasdaq continues weakening from here, from the upper trend line towards the lower trend line, unless something fundamentally changes. So for the US 30 or the Dow Jones, we expected this area to be acting as the support. Just a moment. So this was the previous resistance, now turned into a support. The market did not get quite there, but then it managed to make a nice bounce on Tuesday and then a very strong rally on Wednesday. And now to complete this path, the market needs to continue the rally and rise to 39,882. And this is my personal overall expectation for the day, that at least the market rallies and retests that area. So for the US 500, or what we call the S&P 500, the market managed to break out of this flag, pull back here, and then up, and then down, then up, basically indicating a swing where the market was moving downwards and now up, trying to recreate a new all-time high. So this is what we are seeing in the market, consistent push higher. And now, after the big jump yesterday, I expect some form of continuation today, with the market potentially hitting a new all-time high and breaking even higher. So now that we have this pullback followed by a big jump here, I expect to see the SP 500 at least hitting a new all-time high before we get through to Good Friday. So Brent oil has experienced a nice pullback here. So after the pullback, we saw the market breaking up, found resistance here, did not get to our target, then played sideways for a while. From the 15-minute chart, you can see the range and how it played out. Then eventually the market broke towards the lower side, went all the way to the support, bounced and moved higher. So once it moved higher, now you can see it's really struggling from breaking $85.75 per barrel. But then if you go to the 1 hour chart, and now I'll try to clean the chart, you notice that this is what we have now. So without all that noise, I would say this is our resistance area, and our support is following this path here. And as we speak right now, the market is attempting to retest the upper trend line. So from the 4 hour chart, this is how it looked like. So the big momentum up, we had a pullback, and each move is getting shorter and shorter. So from the 1 hour chart, you can see a big move, smaller move, smaller move, smaller move, and so on. So we are currently in a consolidation zone in oil prices, but they still remain high. At $85 per barrel, we consider oil prices to be expensive. And in this case, we have seen Putin announcing that the oil producers should be cutting production. And in this case, he's trying to manipulate prices higher. And also we saw the Ukraine basically bombing a couple of Russian oil infrastructure. And as a result, this raised concerns about supply of oil, which basically tends to lead to higher prices. And now, with the collapse of the Baltimore Bridge in the US and among other factors, reduction of crude oil supplies in the US, then it basically means there is an expectation that this formation might potentially break towards the upper side. So I'll be very watchful on this area to see if there is a breakout, and then from here we could be seeing some further upside potential. So Euro 50 cash index formed a new all-time high yesterday. Today seems like the beginning of a pullback. So I would be very concerned with this one, trying to understand where the prices might be pulling back. And if there's a pullback, then that could be a value area. So any form of price action that puts price back to this area then might represent another buying opportunity. I wouldn't recommend buying at all-time highs. So there is a good chance the market could pull back here. And for Bitcoin, we are seeing a market that was weakening for two consecutive days. This was on Tuesday as well as on Wednesday. But then that formation has already been broken. So from the technical side, this is how it looks like. That's your flag forming right here with a fake out yesterday in the evening or in the afternoon. And now the market has broken above again. Now we are above $70,490. And there's a good chance we will be seeing some further upside potential and perhaps a new all-time high before the halving. So the all-time high is not that far off. It's at 73,758. And this is a move that Bitcoin could literally make within a couple of hours. So French 40 index finally broke outside this particular flag. I remember discussing with you guys on Tuesday during the markets at a grand session, which happened at 4 p.m., that there's a high possibility that the French stock market index will be breaking towards the upper side. So this happened yesterday, and since then we have seen price struggling to move higher, but all the more an expectation to see a new all-time high. So in this case, I will be very bullish for the day, the French 40 index, expecting another leg higher. So notice the previous time we had a consolidation. The consolidation basically led to this strong bullish momentum within the next couple of days. So now after this consolidation and a break, I expect to see some further upside potential happening from the French 40 index. So USD trading against the Swiss franc, we are continuously seeing this bullish momentum continuing, especially after the last week's big surprise cut by the Swiss National Bank, basically cut interest rates by 25 basis points, leading to a strong bull market, then sideways for a while, and then a continuation. And then today, I expect to see that momentum continuing. So towards the end of the day yesterday, the market had pulled back, but then investors started strongly on this one this morning. There was a strong rally, a pullback, and a continuation. So it seems likely that we are now trading within a triangle, but all the more it basically shows that there is a good likelihood that this triangle might be shaping up better for the rest of the day. So I'm trying to make this as accurate as possible. So the triangle may not be as accurate. So this is what we are seeing from yesterday, and a potential breach of the upper trend line would represent a nice buying opportunity. So that's all for the day. I think I'd seen one request here. I'll try to get the request. So there's a question about Audi USD and what else? And Euro CHF. And a good question, which is the most promising pair today. So Lamik, we have had some challenges with the market pulse. So we decided to discontinue it and rather just do one session on Thursdays. So Euro CHF and Audi USD. Right. So Australian dollar trading against the US dollar, as we've mentioned, the dollar is pretty strong today. So what we're seeing here is a market accelerating towards the previous support and also making a major breakout. So from this low to the previous low, this is how the trend line looks like. So what you are witnessing here is a major breakout. So after the market stayed within this formation for a while, notice that this is the first time the market is making a major breakout, which means that there is an expectation that this will be accelerated further downwards. And at least a nice target would be the most uh, recent low along that trend line. So we could be seeing the market going for this area, but overall, from technical analysis, we know that the market often goes for the base of the pattern. So in this case, an expectation that the market will eventually drop to 0.64417. So that's pretty clear, basing it on the strong dollar in the market today. The last one, I'm trying to check again, was Euro CHF. So as for the euro trading against the Swiss, we can see the euro taking a step back. The euro USD has been pretty weak for the day, and the CHF is regaining some momentum. So after the big spike last week on Thursday, there was a pullback on Friday, and then a continuation on Monday, Tuesday, Wednesday. And then now, today being last day, we are seeing some form of pullback. So if you zoom out, you notice the strong progression that has been happening in this pair. So nothing has changed fundamentally per se. The only concern that I've seen with this kind of currency movement is that the Central Bank of Switzerland, or the SNB, Swiss National Bank, is now very much concerned with what they had done last week. And they are seeing out of speculation leading to the weakening of the Swiss franc, and they could potentially intervene in the currency market to make sure that their currency doesn't lose too much. So if you do this by the month, you'd notice that since the year started, the Swiss franc has lost 4.65% against the euro, and even much higher with other currencies. So in this case, there's a nice pullback, but at some point, I should be expecting to see a continuation of the same. So judging from what we have right here, then I would be expecting to see better momentum happening once the market gets to the trend line. So I would wait for the pullback and then try to identify a nice trading opportunity here, especially if there's evidence of buyers entering the market at this price level. So that's it for the day. Thank you very much, everyone. If you'd like to open an account, make sure to do that. The links are directly below. So also remember to like the live video and share with your communities. There's one question here from Trapscale. Which is the most promising pair today? I think from the analysis we have done, it's easy to identify. Don't think I've selected a most promising pair for the day. With the dollar index being this strong, let's see, Euro, Pound, USD card. USD card seems like a good candidate for this breakout. Gold. Gold seems to be the most important or most likely to rally today. So after this breakout, pullback, retest, this is a book formation. It's a pattern that happens the same way they describe in books. So for me, it's a triangle, a breakout, a retest, and a continuation. So this is like a high probability setup. So even if it doesn't get to the target of 2,222, it seems more likely that this momentum bounce will continue. So for me, I would call that my chart of the day. So a good question from Manthi. Should we expect rate cuts happening soon and weakening CAD as per the Bank of Canada Deputy Chair speech on Wednesday? I think inflation is still quite a big problem for Canada. They are yet to hit the target of 2%, and it would be a big policy mistake to cut into inflation. So in this case, expect that maybe there's a good likelihood that Canada will be following the America's path. Both economies tend to share some some inflationary pressures that are similar. So in this case, Canada might be following the path of the US. So in this case, there's a good chance that Canada maintains the current policy rate, but at some point we could be seeing Canada going for a rate cut, but that will be based on the progress they make on inflation. A good comment. Can they bring back Market Pulse? It was very insightful. Thank you for the feedback. I'll be passing this along with my team. Hopefully, we can get it back going. So thank you, guys. Thank you for your time. And remember, we have a new episode of the British Panda podcast. Make sure to check it out. We have a new episode on the Financially Incorrect podcast. Make sure to check that out too. And enjoy the rest of your day. Have a peaceful week and happy Easter.